Now, let's run through how the week started for us here in this community. Now, at the beginning of the week, it was quite clear that price action was more of consolidating, confined within that range between the $90.50 level and the $90 area to emphasize the level of indecision at that particular point in time. And you know how we do it whenever we have this kind of range. We want to exercise patience, waiting for a signal to come either in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And interestingly, throughout the first day of the week, we saw how price was consistently breaking out of the resistance line of that range at the $90.50 level, which further incited the idea of positioning ourselves for buying opportunities. So we took advantage of buying the US oil spot at the beginning of the week as soon as price broke out of the $90.50 level. And remember, we also capitalized on more opportunities by adding more positions at the breakout of the $90.80 level, the $91.15 area, and of course the $91.50 level before the bearish momentum came in to take us out of that position. And of course, you know that whenever price moves significantly well in this community, we always move our stop losses to secure the current buy position. And if you have done that correctly, you must have a minimum of 150 pips to catch there, as at the first day of the week. Now, interestingly, prior to yesterday's live session, we also had some selling opportunities here as we saw price break down both the ascending trend line we identified on the higher time frame. We shall be looking at that in a moment, but we had an ascending trend line here. We had the first one here, we had the second one here, and in fact, we saw how price broke down, retested the first one to inside a sell position, and we saw price right all the way to the downside. And during our live session yesterday, we acknowledged that considering that impulsive bearish move, we are likely going to be seeing a downtrend continuation. And for us to be part of that downtrend continuation, we decided to look out for a retracement into that sell window. Remember, we identified the sell window just right between the $91.50 level and the $90.50 area, where we said if we begin to see some signs of sharp rejection of that area, selling pressure showing on signs that buyers are losing that momentum, it will be a beautiful opportunity for us to sell. And look at what happened here yesterday. We saw price retest the structure during the later part of the New York session and continue selling pressure persist below that area to emphasize that it is time for us to sell. And of course, we sold. And interestingly, one interesting thing about the structure is how price action came back to retest the ascending trend line that was broken to inside that bearish move to the downside. And remember that we also had multiple levels that we said we were going to be using to maximize the potential of the bearish move. So we have levels at the $90 area, as you will see right here. We also had one at the $89.65. We had one at the $89.25. And of course, we had a final one right here at the $88.75 area to maximize that move to the downside. So it has been quite a profitable week for us so far on the US oil spot, as if you are taking in that sell position, you will currently be having over 200 pips on that first move, and the second position here is running with about 150 pips move, while the third position is running with about 120 pips, and we have the fourth position running with over 70 pips in profit, and the fourth position running with over 35 pips in profit. So once again, congratulations to everyone who has been part of this profitable journey. Now, for those who still have a sell position running at this point in time, it is advisable that you want to be moving your stop losses accordingly to secure this current sell position, as we might be seeing some bullish momentum come in And as a result of this, and looking at the way price action is at this point in time, I will be suggesting that anywhere above the $88.80 level and the $89.25 zone seems most appropriate to secure all sell positions there. So move all your stop losses within this range, and remember that we want to be given enough room for price action to breathe. Now, with a well-secured position at this juncture in the market, what is going to be our next line of action? Are we going to continue selling the US oil spot today, or are there chances that participants in this market will see the US oil price as cheap enough to start buying again? Now, for us, before we go into the details of what our expectations will be looking like, I would like to refresh our memories as to what we saw at the beginning of the week. Now, at the beginning of the week, we were analyzing the 4 hours time frame where we were able to identify the strength of the buyers in this market. And in fact, we were able to connect a series of higher lows, giving us a beautiful ascending trend line where we said we will be using the trend line to guide our decisions for this week. And you know how we do it with our ascending trend lines here in this community. As long as price remains above the ascending trend line, we feel comfortable buying, while we also look out for more opportunities to buy. However, if price breaks down the trend line, then we want to be getting ready to sell. Now, if you zoom right into the current structure, let's zoom right in so that we can see things clearly. Remember that we had a key level situated at the $90 area. Remember, as we saw price broke down that structure on Wednesday's trading session, that was yesterday morning. We saw price break down the $90 level. We saw price break down the ascending trend line, and all of the signs here are clues indicating that sellers are likely going to be coming in. And one of the decisions we made here yesterday was to wait for a retest of the ascending trend line or the $90 area to capitalize on selling opportunities. So we saw the breakdown of both structure happen, and we anticipated a retest of structure where we identified our sell window to join the downtrend scenario. And you can see what happened. Price moved just as expected, pushing price further to the downside. So now we are at a critical juncture in the market right now, where you will see here that in the last 5 to 6 hours, we've been noticing some buy pressure resume around that $88.50 level, as you will see right here. And if we align this level with what has happened during the second week of this month, you will see that that area has a tendency of giving us buying opportunity. Now let's line up that structure together so that we can use it as a yardstick to guide our independent trading decisions for today. So we have a level situated at the $88.50 area. So you do want to be marking out these levels on your chart right now, as we shall be using it as a yardstick to guide our trading decisions for today. So we have the $88.50 level. So let's mark this one out on our chart right now and look at what has happened around this area in the past. We saw the breakout buy pressure. We saw the breakout retest buy pressure here. And if you fast forward into last week, Friday, we saw another buy pressure resume around this area. Now price is back into that zone, and in the last 6 hours, we've been noticing our sellers have continued to struggle around this area. Now the question at this particular point in time is, will price action find a bullish platform here to incite an uptrend continuation, or is it likely that we see price break down the structure to incite a sell-off in this market? Now, you will agree with me that we are at a crucial juncture in this market. So at this point, we shall be scaling down into the 1 hour time frame to see how participants in the market has been reacting to this $88.50 level. Do we have any patterns or structures that we will be using to guide our next move? Now, scaling down into the 1 hour time frame, this is where we are right now. just right around that $88.50 level. And in fact, I would like to see price continue to the downside for me to join a bearish move. And as a result of this, let's look at the $81.10 level as an area to capitalize on the downtrend continuation. So I'll be giving this a purple color to differentiate it from the previous lines. So we have the $88.10 level. Let's mark that out. All right, purple color too. Beautiful. So at this point in time, you could sell below the $88.50 level and then had more positions at the breakdown of the $88.10 area. Now, there are two ways to which we can capitalize on this move. And for those who have been with us in this community for a while now, you know how we do it. For those who have been profitable so far this week, since you are very profitable, we can afford to leverage on some of the profit we have made so far this week to test waters below the structure to capitalize on downtrend. So we can afford to place a sell stop order below the $88.10 area to capitalize the next move, and of course below the $88.50 level. And of course, if this does not work out, we know quite fine that we are only leveraging on the profit we have made so far this week. However, if you are new with us here in this community, then you are coming in from a clean slate, then you want to be patient for confirmations to happen before you jump into a position. And one of the things you want to be looking out for here is price breaking down the $88.10 area, retest of structure. So as soon as we notice the breakdown of the structure, we scale down into our lower time frame where we want to look out for signs that buyers are finding it difficult to climb back above the $88.50 level. And if this happens, it would reflect on the chart as continued selling pressure, after which we want to be joining a sell below the $88.10 level. So this is how we are going to be capitalizing on a bearish momentum to the downside. However, if the contrary happens here, how do we intend to capitalize on that? And you know how we do it in this community. In as much as we're looking out for selling opportunities here, we cannot ignore the potentials of buyers. And in fact, since the last couple of months, you notice that price has been consistent, been finding higher highs as price action went on to hit the highest point this year at the $92.50 zone. Now, what is it that we are going to see on this chart that will make us change our bias from bearish to bullish? Well, personally, if we look at the structure closely and considering the continued buy pressure around this area in the last 4 to 5 hours now, we might likely be seeing a move that will take out all these buy positions here. Now, for me to capitalize on this opportunity, there's a trend line here which I would like us to identify, which let me do that quickly. So we have a trend line. Hold on a second. So let's thicken this a little bit, as this is going to be one of the yardstick we're going to be using. So let's make it red color. All right. So let's bring back our candle chart and readjust this to suit the pivot highs in this market. So you can see how this trend line has been affecting price action since yesterday, as you saw here, rejection. Then we saw the breakout, price came back down, breakdown below that structure, and since the breakdown happened during the later part of the New York session yesterday, price had continued to remain below that trend line. So this trend line here is going to be a major factor in determining where price is going to be going for today's trading session. So if price remains below that descending trend line, we shall feel comfortable in our sell position and of course look out for more opportunities to sell. But if at any point in time price action takes out that trend line, then we want to be seeing this as a signal that we might likely be seeing an uptrend move. But remember that we are not going to be getting too excited at the breakout of that structure, neither are we going to be having a buy stop order yet, as we will need some confirmation to happen before we jump into that position. And in fact, the breakout of that trend line could turn out to be a false breakdown that could incite some sell-off going forward. So what we are going to be doing here is that as soon as price breaks out of that trend line, we shall scale down into our lower time frame to look out for signs like a retest of structure. It could be the retest of the trend line or the $88.50 level where the appearance of buy pressure comes in, and this will be a beautiful sign that sellers are finding it difficult to drop below the trend line and the $88.50 area, giving us a beautiful opportunity to join the uptrend move. Now remember that we have multiple levels here that we can use to capitalize on this uptrend continuation. We have the $88.75, we have the $89.25 area, and of course we have the $89.65 level and the $90 area, which happens to be our key level for this week, as levels that will look out for more opportunities to buy if price action eventually breaks out and retests these structures. So this is how we are going to be managing our trades on the US oil spot today, and you can see how important both the descending trend line here and the $88.50 level is going to play a major role in determining what our next line of action will be. So you do want to be marking out these levels on your chart, most importantly the trend line and the $88.50 level. Let's see how the market will react to the structure in the next couple of hours to give an insight of what our next line of action will be. So I wish you best of luck on this one. Let's see how the market plays out. Mark out your levels and let's ensure that our structures mature before we jump into any positions. So if you have any questions whatsoever as regards to the current setup or as regards to my explanation, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions.